Let's go, people.
Country, I'm young, scrappy, and hungry, and I'm not throwing away my shot. I'ma get a scholarship to King's College. I probably shouldn't brag, but dag, I'm amazed and astonished. The problem is a lot of brains, but no polish. I gotta holler just to be heard with every word. I drop knowledge, I'm a diamond in the rough. A shining piece of coal, trying to reach my goal. My power of speech, unimpeachable. Only 19, but my mind is older. These New York City streets get colder. I shoulder every burden, every disadvantage I've learned to manage. I don't have a gun to brandish. I walk these streets famished. The plan is to fan this spark into a flame. But damn, it's getting dark, so let me spell out the name. I am the A-L-E-X-A-N-D-E-R. We are meant to be a colony that runs independently. Meanwhile, Britain keeps shitting on us endlessly. Essentially, they tax us relentlessly. Then King George turns around, runs a spending spree. He ain't never gonna set his descendants free. So there will be a revolution in this century. Enter me.
He says in parentheses.
Don't be shocked when your history book mentions me. I will lay down my life if it sets us free. Eventually, you'll see my ascendancy. And I am not throwing away my shot. I am not throwing away my shot. Hey, yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot. I am not throwing away my shot. I am not throwing away my shot. Hey, yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot. It's time to take a shot.
I dream of life without a monarchy. The unrest in France will lead to anarchy. Anarchy, how you say? Or anarchy. When I fight, I make the other side panicky with my shot.
Yo, I'm a tailor's apprentice, and I got y'all knuckleheads and local parentis. I'm joining a rebellion, cause I know it's my chance to socially advance. Instead of sewing some pants, I'm gon' take a shot.
But we'll never be truly free until those in bondage have the same rights as you and me. You and I do or die. Wait till I sally in on a stallion with the first black battalion. Have another shot.
Geniuses, lower your voices. You keep out of trouble and you double your choices. I'm with you, but the situation is fraught. You've got to be carefully taught. If you talk, you're gonna get shot.
Bird, check what we got. Mr. Lafayette, hard rock like Lancelot. I think your pants look hot. Lawrence, I like you a lot. Let's hatch a plot blacker than the kettle calling the pot. What are the odds that God will put us all in one spot? Pop in a squad and conventional wisdom, like it or not. A bunch of revolutionary manumission abolitionists. Give me a position, show me where the ammunition is. Oh, am I talking too loud? Sometimes I get overexcited, shoot off at the mouth. I never had a group of friends before. I promise that I'll make y'all proud.
Let's get this guy in front of a crowd.
I am not throwing away my shot. I am not throwing away my shot. Hey, yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot. I am not throwing away my shot. I am not throwing away my shot. Hey, yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot.
Everybody sing.
Whoa, whoa, whoa.
Hey.
Whoa.
Say, let him hear you. Let's go. I said shout it to the rooftop. Sit to the rooftop. Oh, come on. Come on, let's go.
Rise up when you're living on your knees. You rise up. Tell your brother that he's gotta rise up. Tell your sister that she's gotta rise up.
When are these colonies gonna rise up? 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 Rise up!
I imagine death so much it feels more like a memory. When's it gonna get me? In my sleep, 7 feet ahead of me. If I see it coming, do I run or do I let it be? Is it like a beat without a melody? See, I never thought I'd live past 20. Where I come from, some get half as many. Ask anybody why we living fast and we laugh, reach for a flash. We have to make this moment last. That's plenty. Scratch that. This is not a moment. It's the movement where all the hungriest brothers with something to prove went. Foes oppose us. We take an honest stand. We roll like Moses, claiming our promised land. And if we win our independence, is that a guarantee of freedom for our descendants? Or will the blood we shed begin an endless cycle of vengeance and death with no defendants? I know the action in the street is exciting, but Jesus, between all the bleeding and fighting I've been reading and writing, we need to handle our financial situation. Are we a nation of states? What's the state of our nation? I'm past patiently waiting, I'm passionately smashing every expectation, every action's an act of creation. I'm laughing in the face of casualties of sorrow. For the first time I'm thinking past tomorrow. And I am not throwing away my shot. I am not throwing away my shot. Hey, yo, I'm just like my
my country, I'm young, scrappy, and hungry, and I'm not throwing away my shot. We gonna rise up, time to take a shot. We gonna rise up, time to take a shot. We gonna rise up, rise up. It's time to take a shot. Rise up, rise up. It's time to take a shot. Rise up. It's time to take a shot. Rise up. Take a shot, shot, shot. Hey, yo, it's time to take a shot. Time to take a shot. And I am not throwing away my shot.
Hello. How's everybody doing today? Thank you for joining us today. This video is the next in the series, exploring the macro and geopolitical implications of over-leveraged hedge funds on the financial global sector. That being said, my name is Marcel. I'm the Butcher of Wall Street. This is the bull thesis on AMC, Gamestop, and precious metals. Everything you need to know. Period. I'm going to move this around just a little bit so you guys get a better view here on the screen.
Oh yeah, let's fucking go.
Let me move this over here just to make everything easier on everybody. You want to watch me move my whole screen around right now. Yeah, that song, for those of you that weren't able to see it on the screen, was My Shot from the Hamilton soundtrack. Exceptionally good song. Love that. I think it's just so fitting for everything that's currently happening. I think it's the absolute most fitting, perfect thing. This is the bull thesis on AMC, GameStop, and precious metals. So, the AMC primary bull thesis, before I get started, this is going to be a longer video. Grab your popcorn, grab a drink, grab a smoke. You're going to need it. When this is all said and done, if you don't understand what's going on, I can't help you. You're going to have to, look into it on your own or just write it off as a bunch of bullshit. But as always, do your own due diligence, because I'm not here to do that for you. I'm just here to tell you what I've found, what I've learned. And that's all. By the way, I'm not a financial advisor. This is not financial advice. AMC primary bull thesis. The risks of bankruptcy or losing revenue and income to streaming services are extremely slim to none, and are purposely overblown by short hedge funds, media conglomerates, and institutions with short interest that is inescapable due to the vast number of naked shorts sold, not yet purchased, and synthetic shares created and rehypothecated, amongst many other factors. AMC's recommended viewing number 1 is the Thomas Peterffy, CEO of Interactive Brokers, interview in regards to the congressional hearings of January 28th, 2021 that took place in regards to what happened on January 28th, 2021. The date AMC and GameStop were forced into position close only by most major broker-dealers like Robinhood, Webull, IBKR. For those that aren't aware, it means they pulled the buy button. They proverbially made people unable to buy or sell. To buy AMC or GameStop, and only able to sell. So they could either hold or sell. Those were the choices that people had. But they had one other choice, and that was to exercise call contracts. And a lot of people didn't know anything about that. Thomas Peterffy goes on to say, so if the longs had known retail, that they had the right to ask for those shares, and he means exercise, and they really wanted the short squeeze, that's what they would have done. So if the longs had known that they had the right to ask for those shares and they really wanted the short squeeze, that's what they would have done. Quote, Thomas Peterffy, CEO of IBKR. We've got some known facts on GameStop and AMC, which I'll share with you guys right now since we're on the subject. Leading to January 28th, 2021, Melvin Capital directly shorted GameStop, opposed to shorting exchange-traded funds, depository receipts, indices, or via futures, is the contract, swaps, married puts, calls, divorce puts, calls, etc. There are many, many different ways. This caused short interest to be visible to the naked eye. Over 140% short interest was visible to retail investors because now they had actually had to report that data because they forgot to hide it via their hundreds of other methods. Melvin got careless or forgetful. I'm not sure what the best term would be, but that's not the point. The point here is they failed to hide their short positions. There were 50 million registered GameStop shares available. 50 million. And 75 million shares were sold short that needed to be purchased. There was 150 million additional shares short via call options if retail had exercised their call contracts. If longs had been exercised, shorts would have had to deliver 270 million shares, while only 50 million shares existed. And that's only talking about GameStop. That is the date that GameStop got to its all-time highs of $480 a share. So far, I'll say that. All-time highs so far. Facts on AMC and GameStop. The long broker-dealer would have had to buy the shares on the market at any price, pushing the price of GameStop into the thousands and the price of AMC into the hundreds, if not the thousands as well. Due to the variances in their actual price at the time, AMC was lower before GameStop started squeezing. Therefore, just speaking theoretically, GameStop would have continued on higher at that time. Because those were the prices that they were trading at prior to the January squeeze. GameStop was already higher. Shorts wouldn't be able to afford to pay, so the shorts would have defaulted on the broker-dealers. Come here. Let's go. Thank you. Sorry, my dog was going nuts. I had to put her in her crate for a little bit because she's just over there tearing shit up. The broker-dealers would have been defaulted on by the shorts. So then the broker-dealers would have defaulted on the clearinghouses like the OCC and the DTC, leading to an inevitable collapse of many financial companies. As of September 1st of this year, ISDA Phase 6 initial margin requirements were greatly increased to protect the DTC and OCC from default, and the CAT system was more fully implemented. As of September 8th, to protect itself from defaults, the Options Clearing Corporation has removed the maximum cap from pension funds that can be used as their backstop their defaults, and removed the regulations that required the OCC to have to file advance notices with the SEC or other regulatory bodies in order to do this again. That means even though they raised the cap to around $5.5 billion, they can tap it at any moment without having to file advance notice and take even more pension fund money to protect themselves from a default. Now, AMC's growth and business development. We've got vastly increasing revenue and EBITDA. Earnings potential is extremely high, much more so than most people can imagine due to their growing status as a leader in the movie theater experience. Retail sales with popcorn and precious metals markets with Hycroft Mine Corporation. They have paid off their debt, a lot of their debt, not all of it, and they refinanced a significant portion of it for much better interest rates, saving millions and millions of dollars and removing debt covenants. AMC Theaters remains the #1 movie theater company in the world. And they've got growing liquidity and diversification. So much so, as a matter of fact, that they have cash on hand, $1,176,300,000. AMC's total revenues grew to $1,166,400,000 compared to only $444,700,000 for the second quarter of last year. That was more than doubled. Adjusted EBITDA improved by $257.5 million to a positive 106.7 million compared to the loss that they had in second quarter of 2021 of negative 150 million. So that's a $257 million improvement, and they are net positive on EBITDA by over $100 million. In the second quarter of 2022, AMC had attendance of 59 million people at AMC theaters, up globally 168% from the 22 million attendees in the same quarter of 2021. AMC does not technically own their popcorn farms. They contract with small mom and pop farms, and AMC hand selects the seeds that are used and grown for their popcorn on a long-term contract with these farms. And in turn, they work with the manufacturer Weaver, which the farmer produces and turns in their popcorn to Weaver, which turns the corn into actual popcorn for the stores, and then is shipped via a third-party logistics company to every AMC theater in 35-pound bags for our consumption. They have an established supply chain, and they can distribute their products directly to retail store shelves using third-party logistics companies and outsourcing the farming as well, which makes it incredibly cheaper, period. AMC's issued NFTs and NFT movie deals that have inspired more technologically inclined attendees and shareholders. Fewer films are being shown, but more money is being made per film, averaging $15 million per movie thus far in 2022, a number not seen since 2010. Meanwhile, the shorts are trying to say that movie theaters are dying business. Some of them might be, but AMC's not. 2010 was also the year of Avatar, and Avatar 2 release is slated for December 16th of 2022, where we could potentially surpass all-time highs of the actual amount averaged per film ever for AMC. Disney is also offering exclusive showings in a partnership with AMC Theaters. Warner Brothers has partnered with AMC Theaters to show movies exclusively for 45 days during 2022. So you guys don't have to worry about the movies going to streaming services, because there's going to be there's an exclusive contract with Warner Brothers for their movies to be shown in AMC Theaters for a month and a half. Retail investors own 85% of the entire AMC float of 516 million shares. AMC issued a dividend under the ticker #APE, which means AMC preferred equity stock. These preferred shares have voting rights and are hard to borrow and to short, but that doesn't mean it's not happening. AMC is one of the only stocks in the world that has ever and is currently being held to the extent of 85% ownership. That is what sets it apart from other stocks. That and the fact that it's been massively borrowed against and shorted for many, many years. AMC versus APE. Why not both? Truly, why not both? AMC issued a dividend in the form of a stock called APE. It is preferred shares. The total price of AMC is now displayed as AMC 1, a derivative basket which combines the price of AMC and APE shares. And many broker-dealers, including Interactive Broker, do not allow retail investors to buy AMC 1. They're only allowed to sell or exercise the long calls issued on the APE dividend, August 22nd, 2022. Ex-dividend date. I have AMC 1 in my Interactive Broker account, as well as in others, but the only reason I have it in my IBKR account is not because I purchased it. It was issued to me when the APE dividend was distributed, and the call contracts for AMC that I had became AMC 1 call contracts. I'm unable to buy more on Interactive Brokers, but I have bought hundreds and hundreds, as a matter of fact, thousands more of these same call contracts for January of 2023, as a matter of fact. $145 strike. And that's just full disclosure. That's what I like. Deep out of the money call contracts cause gamma when shorts actually have to delta hedge. AMC 1 is now position close only on many broker dealers, and no one is talking about it. Nobody. And so that's why we're here today with the meme stock bull case, to explain to everybody that there's a lot happening that you still don't understand. And that's not a bad thing, because it takes a lot of research and collaboration to try to figure it out. AMC won call contracts entitles the holder of the long call to exercise them and receive a total of 200 shares, even during a short squeeze when shares are hard to get. 100 shares of each, APE and AMC. APE and AMC. Brokers are making AMC difficult to find in the AMC options chain. So AMC 1 is more difficult to find in the AMC options chain under drop-down menus and sub-menus. Schwab has a drop-down menu at the top of the page. There's no prompt or button for it, but you got to go looking for it and click it, and then you will see a drop-down sub-menu. Fidelity has a drop-down menu, and it's listed as adjusted. It's not even listed as AMC 1. It's just listed as AMC adjusted contracts. And when you click them, you can see that they pay out when exercised in 100 of each. APE will not be delisted even if it falls under $1 unless it happens for several weeks at a time. However, CEO Adam Aaron can convert APE into AMC. That's a typo right here. AMC Adam Aaron can convert APE into AMC to prevent delisting, and that would cause shorts to close their positions by buying shares of APE to deliver to the broker, as a forced share recall would occur, because the brokers would demand back their shares of APE that they have yet to receive, and also the prime brokers, etc. So broker dealers and the prime brokers would be getting shares back. T plus 90-day liquidation of shorts by the brokers would automatically liquidate shorts and force close their positions at any cost. Thomas Peterfy, CEO of Interactive Brokers, said, "I was scared of a domino bankruptcy. I tell you, the rules require the long brokers to go into the market and buy the shares at whatever price. So that drove the shares up to 400. And then suddenly, I guess, it didn't go further. But it could have gone further." Is it illegal to sell shares short or create synthetic shares? The answer is no. This is directly from the SEC.gov website. These are Reg Show FAQs. And so this basically asks, is naked short selling abusive or illegal? It says this activity would, selling stock short without having located stock for delivery at settlement, it would violate Reg Show, except for short sales by market makers engaged in bona fide market making activities. Market makers get a hall pass. Market makers engaged in bona fide market making activities do not have to locate the stock before selling short, because they need to be able to provide liquidity. Market makers are not accepted, however, from Reg Show's closeout price and pre-bar requirements. That means it costs them. Selling stock short and failing to deliver shares at the time of settlement, Rule 204, they states that they have to take action to close out failures to deliver by borrowing or purchasing securities of like kind and quantity by no later than the beginning of trading hours on the settlement date following the settlement date for short sale fails, or no later than at the beginning of trading hours on the third settlement day following the settlement for the long fails and fails attributable to bona fide market making, the closeout date. Okay, that's kind of just neither here nor there. It's just important information if you want to understand the rules. They are subject to the pre-bar requirements for the security. And naked short selling anti-fraud rule states those who deceive about their intention or ability to deliver securities in time for settlement are committing fraud in violation 10b1 when they fail to deliver securities by the settlement date. The Hycroft Mining Corporation Bull Thesis. The risks of bankruptcy or losing revenue and income to digging and extraction costs are extremely slim to none and purposely overblown by short hedge funds, their media conglomerates, and institutions with short interest that is inescapable due to the vast number of naked shorts sold, not yet purchased, and synthetic shares created and rehypothecated, amongst many other factors. HYMC recommended viewing number 2 here would be the interview with Hycroft CEO Diane Garrett, in which my friend and I spoke with her and discussed on this channel the implementation of a brand new store for the implementation of the sale of precious metals, NFTs, and much more. I will go ahead and link this document down below for everybody once after the stream. I'll put it down in the comments and in the description so you can go and find all these links for yourself directly from this document. So AMC Theaters, as a matter of fact, currently owns 25% of HYMC, Hycroft Mining Corporation, making AMC and Hycroft Mining nearly bulletproof to total loss or bankruptcy, as they have 25% ownership interest in all of the equipment, land, gold, silver, minerals, and assets of HYMC, both above and below ground. On August 4th, 2022, Hycroft Mining Corporation reported Q2 revenue of $3.83 million, up 89% year over year. In August 4th, HYMC reported Q2 earnings per share is at only negative 0.05, which is up 64% year over year, and in this next quarter could potentially go positive. An impending precious metal squeeze leads AMC Theaters and Hycroft Mining Corporation to near invincibility as far as protection from bankruptcy due to the vast amounts of tangible assets in their possession both above and below ground. HYMC recently completed drilling exploration that yielded a much higher quality and more vast amount of gold and silver deposits than ever imagined. It blows everything else out of the water as far as the things that Diane Garrett has worked on in the past. And she has been extremely successful into turning failing mines into billion-dollar companies. New Hycroft Mining Company website will provide an outlet to sell their silver, gold, NFTs, and other products directly to consumers, increasing EBITDA. Eric Sprott of PSLV, Sprott Physical Silver Trust, is directly invested in HYMC. HYMC can tap AMC and Eric Sprott for additional capital as needed, leading to greatly reduced overall risk as new excavation opportunities arise within their continuing exploration. And only a single-digit percentage of Hycroft's mines have actually been explored with drilling. The remaining over 90% has yet to be searched or explored in a drilling program to check out to see what kind of deposits are there. So there potentially is much, much greater amount than ever imagined in that spot. The precious metal bull thesis. Precious metals are being purchased by governments and central banks around the world. Meanwhile, they are massively shorting these precious metals via derivatives contracts so they can continue to buy at the current low prices before allowing the price on these precious metals to squeeze once the central bank digital coins are implemented, as the central bank digital coins will be tied to the price of precious metals such as gold, silver, palladium, etc. Therefore, long story short, in my thesis, the idea is that the CBD coins will be linked to precious metals in order to save the United States dollar. Because currently the DXY is on a fucking tear. And if you've ever heard of the dollar milkshake theory, you'd be aware that the unexpected events, such as the Fed mentioning today on their the day after their FOMC meeting, the unexpected events are happening that the Fed is currently enduring are most likely other countries that are selling off the United States treasuries. So when Japan and China and others unexpectedly sell off United States treasuries, it causes the bond market to tank. And if the bond market doesn't work, no market works. That being said, a crash of the bond market would essentially be a crash of global equities markets. It's what I'm waiting for. It is inevitable. And at the same time as that's happening, the DXY will go on a fucking tear. And eventually it will collapse and be worthless. But compared to other fiats, for now, it will have some value as the petrodollar. However, in the future, the CBDC will be mandatory, in my non-financial advisor opinion, and it will be linked to precious metals. JP Morgan has 248 billion and 496 million in notional PM derivatives. Goldman has 18 billion 558 million in these PM derivatives. Citibank has 119 billion 877 million in these notional PM derivatives contracts. In April of 21, Ted Butler of B of A noted that they had increased the notional amount of their derivative contracts in precious metals to $8.3 billion. But as of the latest report, second quarter of 2022, B of A's positions have grown from $8.3 billion last year to $39 billion, $79 million this year. These tiny orange dots are the vertical portion of the chart on the precious metal market, derivatives contracts, notional values, all the way through fourth quarter of 2021. And as you can see here, they were rising, and in 2022, they have absolutely exploded because they're being purchased by banks around the world. This is directly from the Office of the Comptroller of the Currency, and you can find that at their website, second quarter of 2022 derivatives, bank derivatives. During the second quarter, 4 large banks represented 88.9% of the entire banking industry notional amounts. 4. And 66% of industry net current credit exposure, NCCE. This is called what's called like netting, bilateral netting. And this is a way for them to bet their shitty contracts, derivatives, which are also bets, against each other. So there's 1,258 insured U.S. financial holding companies in this market, and 4 of them represent 88.9% of the financial risk. These 4 banks dominate in derivatives. These are orange, and the rest of the 1,200 plus banks are the blue on this chart ahead. This is why Lehman Brothers happened. This is why Lehman Brothers happened. There was bad bets on shorts on the market in 2008 in things like Volkswagen, for example, which crashed Volkswagen skyrocketed to its all-time highs exactly 30 days after the September 28th, 2008 stock market global financial collapse. Exactly 30 days after, because margin calls occurred. And Lehman Brothers was not able to meet the call because they were defaulted on by their broker-dealer. And they were defaulted on by their short hedge fund, their family offices, and the retail investors that were selling short. A plethora of defaults went out with Lehman and Bear Stearns, and that's why the federal government had to step in and bail them out. But now, it's much worse than it ever was in 2008. The liabilities of these top 4 banks, $173,263,420,000,000. They only have $8 trillion, $43 billion, $60 million in assets. Over-leveraged hedge funds, family offices, prime brokers, broker-dealers and such, and holding companies will have to close short positions on meme stocks and then eventually silver and gold. And we'll be forced to allow them to squeeze when the stock market crashes and when the CBDCs are implemented individually and respectively speaking. Thomas Peterfy, the CEO of Interactive Brokers, said, "I don't know the short interest daily, so I don't know what or when to increase the margin amount by. Some brokers may not know how to deal with this, which is why I think that the SEC should require all shorts to be reported daily. I would like to ask the SEC why they didn't act on the morning of January 28th, 21, because I was so scared. I can't tell you how scared I was. Problem is, shorts currently only have to report short interest 2 times a month, every 15 days, pretty much. Forcing daily short interest reporting would fix the hole in the financial system that Thomas Peterfy is talking about. That currently allows short hedge funds to manipulate visible short interest via continuous net settlement, depository receipts, ISDA contracts, swaps, futures, married and divorced puts and calls, rehypothecations, synthetic share creations, naked short selling, failures to deliver, wash sales, spoofing, etc., etc. Continuous net settlement is the primary clearing mechanism for the New York Stock Exchange, the American Stock Exchange, and the National Association of Securities Dealers. The NSCC operates the continuous net settlement, which is the security industry's largest trade clearance and settlement system. They net down to one net buy and or sell on all trades expected to settle on the next settlement day, including trades unable to settle on the previous. After they're netted, they allow participants to deliver shorts to the NSCC and receive long allocations from the NSCC for those participants entitled to receive the securities. There is a short cover guarantee that does not apply to ACATS transactions that were implemented with the September 1st, 2022 new ISDA margin requirements, because there are no fund settlement obligations related to ACATS transfers, because they can't create the same bullshit on the new CAT system. And the CAT system was delayed, but ACATS transfers are already partially implemented. So a lot of liquidity and a lot of ability for these guys to commit the crimes that they've been doing has been removed, thankfully. This proves that ISDA Phase 6 implementation is negatively affecting short hedge funds and market makers that could potentially be manipulating and hiding short interest and failures to deliver, like Melvin Capital was. The Consolidated Audit Trail System implementation by the SEC was supposed to be in July of 22, but they pushed back the implementation of some of their SRO reporting obligations until July of 2024. Gee, I wonder why. Because if they would have already done it, the whole fucking system would have already collapsed. They have to wait till after the financial collapse and the CBDC implementation and in order to implement CAT system. They are scared and terrified of it. That's why Hester Pierce voted against it and shut it down and pushed it back. ISDA is the International Swaps and Derivatives Association. They're a trade organization of participants in the market of over-the-counter derivatives, the OTC market, the dark pools, the bullshit. Okay, their master agreement is the standard document used to govern their over-the-counter derivatives transactions, and I'll explain the crime involved there, the criminality potential involved there shortly. Also, aside from ISDA and CNS, they are which are like unlimited liquidity and unlimited fucking swap rolling. You've got flex options that are used to abuse. They're flexible exchange options. They're non-standard options that allow both the writer and the purchaser to negotiate the terms. The style of exercise, whether it be like American or European exercise, the strike price, and the expiration date, as well as other features and benefits. These options also give investors the opportunity to trade on a larger scale with expanded or eliminated position limits. Flex options are a kind of option offering extreme flexibility. They have no regular quote streams to show us the bid and the ask or what they sold for. We do not know what they sold for on the dark pools. Name your fucking price if you're a big bank. That's basically what it's saying. It is extremely easy for them to manipulate and trade shares without impacting the actual share price. There is virtually no counterparty risk, and they call it operational ease. But notice the way that the OTC terms goes from one party to a counterparty to ISDA to the post-trade pricing and management system and back, and does not go to the New York Stock Exchange at all. So in reality, the same way that Archegos was hiding their swaps, any of these short hedge funds and market makers and so on can hide all of their short interest theoretically. Otherwise, when it's listed as a flex, it also goes to the broker, to CBO exchange, listed as a listed option, trade backed by the OCC with daily closing prices. But usually it goes into OTC. It would be better if it was at least went through CBO exchange for and there was actually, it would show up on the bid-ask spread. Married puts. A lot of people don't understand what this means. A married put is considered a synthetic long because it has the same profit profile. The strategy is similar to buying a regular call option without the underlying stock because the same dynamic is true for both. There's limited loss and a limited potential for profit. The difference is that these is simply how much less capital is required in simply buying a long call. So married puts, puts can be married against calls to prevent them from having to hedge against them in an actual manner. That does not mean that buying calls is bad. It just means that manipulation is occurring to prevent further losses because they're already bleeding so heavily. Synthetic puts. A synthetic put is an option strategy that combines a short stock position with a long call option on that same stock to mimic a long put option. It's also called a synthetic long put. Essentially, an investor who has a short position in a stock purchases an at-the-money call option on that same stock. Synthetic puts. This action is taken specifically to protect against appreciation in the stock's price. A synthetic put is also known as a married call or a protective call. Okay, what else they can use? Reverse conversions. This is where it really gets fun. It's a form of arbitrage that enables options traders to profit from an overpriced put option no matter what the underlying stock does. The trade consists of selling a put and buying a call to create a synthetic long. It's as simple as that. Market makers can sell a put and buy a call to create a synthetic long position while shorting the underlying stock. This arbitrage allows them to manipulate the price downwards. It's legal. Well, legal for most of them. And I'll explain again, also lower. As stated above, OTC options are not sent to CBO. They instead go straight to ISDA and never get to any exchange. Flex options have no position limits. They can have massive numbers of contracts at any time and to use to cheaply hedge. And in combination with all of the methods mentioned above and then some, used to hide short interest and delay and suppress failure to delivers on a stock. By not fulfilling their failure to delivers, the price is suppressed even further. What is wash trading and how profitable is it? Wash trading is an illegal type of trading in which a broker and trader collude to make profits by feeding misleading information to the market. High-frequency trading firms and cryptos exchanges use wash trading to manipulate prices. Wash trading returned to the headlines in 2013, right as the phenomenon of HFT, high-frequency trading, became widespread. HFT is the practice of using super fast computers and high-speed internet connections to perform upwards of tens of thousands of trades per second, which is why Ken Griffin has an ownership interest in a company, a satellite company, tower company in Aurora, Illinois, to get as much speed as possible directly to the surrounding exchanges. Wash trades are essentially trades that cancel each other out and have no commercial value. They have no value, but they're used in a variety of trading situations to trade from the left hand to the right hand while bringing a stock's price down. And it's incredibly profitable. Wash trades were used in the LIBOR scandal. LIBOR is a London bank rate, basically, to pay off brokers who manipulated the LIBOR submission panels for the Japanese yen. According to charges filed by the United Kingdom financial authorities, UBS bank traders conducted only 9 wash trades with a brokerage firm and generated £170,000, not dollars, but £170,000, UK pounds, as a reward for the firm in its role in manipulating LIBOR rates. Wash trades can also be used to generate fake volumes for a stock and pump its price. Suppose a trader XYZ and brokerage firm collude to buy and sell stock ABC rapidly. Noticing activity on the stock, other traders may put money into ABC to profit from its price movements. XYZ can then short the stock, profiting from its downward price. Bam. UBS traders conducted those 9 wash trades with a brokerage firm to generate 170,000 pounds in profit. However, in 2014, Citadel Securities was only fined $115,000 for committing not 9, but 502,243 wash sales violations using its computer algorithms. Digest that number for a second. In November 13th of 2020, Citadel Securities was fined for marking 6.5 million positions as long when they in fact were short. This is what I mean when I say shorts marked as long. It's as easy of hitting a Y key or an N key on your keyboard. You hit yes or no. Are you short? Instead of hitting yes, I just hit no. I just turned 6.5 million liabilities into 600.5 million assets, preventing margin calls and cooking the books. It's as simple as that. They were fined by FINRA $180,000 only for failing to mark these 6.5 million equity trades as short sales. They did not admit nor deny the allegations, but they paid the fine. In July of 2020, they were fined $700,000 for not giving the best prices compared to their own account. On July 16th of 2020, Citadel Securities agreed to a $700,000 fine by FINRA for executing customers' orders at prices worse than it traded for its own account. It was again allowed to neither admit nor deny, but paid. On February 2020, Citadel Securities entered into a final agreement with CBO for selling a stock short while not actually borrowing the stock to sell short. In other words, entering into a naked short. They only received a $10,000 fine. That's all. Missed a zero there, but whatever. It's a $10,000 fine for naked shorting and making mad profits. $700,000 fine for giving yourself better prices than your customers. And it's only $180,000 fine for marking $6.5 million worth. No, I'm sorry, not $1 million. $6.5 million shorts as long. Each one of those short, if it was a put option, likely held an underlying of a minimum of 100 shares each. And also fined $115,000 for committing 502,243 wash sale violations in 2014. These are only 4 out of hundreds, if not thousands, of Citadel Securities violations that we have found. On January 27th, the day before the January 28th, 2021 pulling of the buy button, multi-broker stock buying freeze, shutting out investors and driving particular stocks down was a major problem. The COO, Gretchen Howard of Robinhood, told their CEO, Vlad Tenev, just FYI that Dan and I are joining Jim at 5 p.m. on a call with Citadel. They reached out and wanted to speak this evening, and we believe they will make some demands on limiting payment for order flow across the board. We won't agree to anything, but wanted to give you a heads up. Limiting payment for order flow is code for going position close only, because payment for order flow is the way Robinhood makes money. And the more orders that go through at a time, the more money that Robinhood makes via payment for order flow from Citadel Securities. Therefore, the volume got out of control. Robinhood was making a ton of money off those. And Citadel was in trouble, big trouble, as was Virtue and every other player involved, Robinhood included. They just didn't know it yet. That's why Vlad was stupid enough to say, okay, maybe this would be a good time for me to chat with Ken Griffin. You guys can mention that. There was a redacted name, which we already know what it was, but who cares? It says anecdotal evidence that several very large firms are having really bad nights too. Notably things like IBKR, etc. Jim Swartwout, president of Robinhood, said, "Everyone is. You wouldn't believe the convo we had with Citadel. It's a total mess." It was July 27th around 6:25, probably Eastern time, if not California time. Probably California time. Citadel Securities went on to call it a conspiracy. They said conspiracy theorists and plaintiffs' lawyers are trying to concoct an absurd story from regular way communications among Citadel Securities and the brokers who handle orders for retail investors. Of course, the teams at Citadel and our counterparties are in constant communication to meet the needs of retail investor community. Against the backdrop of a global pandemic, amid blah, 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 blah bullshit, they claim that their operational demands were addressed and that retail investors had access to Citadel Securities' superior execution capabilities. The same one in which they didn't give people the proper pricing. They committed a bunch of wash sales and sold a bunch of naked shorts. Is it conspiracy? How many people have been defrauded? Primary bull thesis for GameStop. The risks of bankruptcy or losing revenue and income to streaming services and streaming companies like PlayStation and Xbox Online are extremely slim to none and purposely overblown by short hedge funds, their media conglomerates, and institutions with short interest that is inescapable due to the vast number of naked shorts sold, not yet purchased, and synthetic shares created and rehypothecated amongst many other factors. The second quarter of 2022 ended the period with cash equivalents of $908.9 million on hand, as well as no debt other than a single low-interest, unsecured term loan associated with France's government response to COVID. Inventory was $734 million at the close of the second quarter, compared to $596 million at the close of the prior year's second quarter, reflecting their focus on maintaining adequate in-stock levels to meet customer demand and offset lingering supply chain issues. Their sales attributable to collectibles grew to $223 million for the quarter, compared to $177 million in the prior year's quarter. They had the launch of their digital wallet by launching GameStop's non-fungible token marketplace to allow gamers, creators, etc. to buy, sell, and trade NFTs. They have modernized and strengthened the company's systems, and GameStop GME stock split dividend mismanagement could provide CEO Ryan Cohen the ability to force a share recall via the removal of the GameStop stock from the DTC for it to be traded on another exchange. GameStop's letter to their shareholders in 2022 said that they installed a new management team, strengthened their balance sheet, hired hundreds of individuals with tech backgrounds, refocused the organization around a single mission to delight customers, and they have a significant amount of capital to our e-commerce business to strengthen its fulfillment network, catalog systems, and online and mobile experiences, etc. The NFT markets, which they're now a part of, represents an expanding $41 billion addressable market. Now, APE. The AMC preferred equity bull case thesis. APE is a preferred equity and supposed to settle in T plus 0 days. But all the data we've seen so far is showing us that it's actually settling in T plus 2 days. Because they couldn't possibly let it settle in T plus 2. Not because we don't have the technology, but because it would expose all those issues that we've seen being hidden via the T plus X date settlement systems. Let's end this poll. We had 1,300 votes. Let's see how we're looking. Real quick, I just want to check that out and see how we're looking on this poll. All right, we had, are you selling your meme stocks? 6 people said they're paper-handed bitches. 62% people said, no, I'm a diamond ball, diamond titty retailer. 4% said, what are meme stocks? And 28% said, what sell means. That is quite good out of 1,303 people. Thank you, everybody, for voting. That was a lot of fun. All right, let's see what we got here. Oh, look at that. Holy shit. APE, the AMC preferred equity shares. Aside from not settling in T plus 0, they're actually settling in T plus 2 days. We've got some fuckery going on there. Their failures to deliver on the first day of reporting was on August 24th. That was 2 days after the ex-dividend date of August 22nd. On that first reporting date of August 24th, 2022, there were over 43,438,257 failures to deliver. Jesus fucking Christ. Oh, I'm sorry. Don't be mad at me, but I'm sure the Lord won't care what the hell I say. He knows we're but ignorant apes. Many AMC investors didn't receive their shares of APE for several days and weeks as market makers and shorts had to wait and try to convince retail to sell their shares of APE, or at least some retail to sell their shares of APE, in order to buy them themselves and then further rehypothecate them and manipulate them to fulfill orders to other broker dealers in turn their retail investors. The methods listed above previously for hiding short interest in FTDs are the same methods that can be used to suppress the failures to deliver on APE, ISDA contracts, CNS program, etc. The exciting thing is AMC 1 is the greatest thing since sliced bread. The greatest fucking thing since sliced bread. The long calls holding 100 APE and 100 AMC shares of the underlying asset, AMC and APE, will cause failure to delivers to spike around the T plus 35-day settlement rules. And because AMC issued APE on the 19th of August and the ex-dividend date was on the 22nd, the settlement date, which was from Friday to Monday. That's why there's a 2-day gap there. There's not supposed to be. That's T plus 0 still technically. But the the settlement that we've seen is T plus 2. Semantics, but I know some people are going to have that question. AMC 1 long calls holding 100 APE and AMC were issued on August 22nd, the ex-dividend date. Around T plus 35 days from that, we'll see FTDs begin to spike and potentially the price begin to change. APE was not technically an IPO, but as a dividend, it did IPO in the sense that on the ex-dividend date, it was distributed. And therefore, syndicates were created and would still need to deliver the APE shares, the dividend, by the ex-dividend disbursement date rule of T plus 90 days from August 22nd, 2022. Pay attention, people. T plus 90-day liquidation by lending brokers to the shorts may occur if APE hasn't been delivered by that date, which is estimated to be around November 23rd of 2022. It could begin sooner, it could begin later, but that is my estimation. That is my estimation around the soonest that the 90-day time period extends through. The shorts that needed to provide the dividend in this case are the syndicate. Because, although it wasn't an IPO, it did drop a dividend. And this dividend created the syndicate. Defaulting on the delivery of APE would result in asset liquidation and automated closing of positions by the broker, the lending broker, against the the lender, whether it's a short hedge fund, a retail investor, a family office, blah, blah, blah. FINRA's rule number 11880, section B, states final settlement of syndicate accounts shall be effected by the syndicate manager within 90 days following the syndicate settlement date. Otherwise, they are subject to asset liquidation and automated closing of positions. Notable T plus 90-day liquidations as the syndicates failed to deliver in the past are as follows, verified by yours truly. I did this myself just a few minutes ago. Huge shout out to the people on the internet, and I will throw credit references at the bottom, who helped me figure some of this stuff out. This has been an amazing form of due diligence by the entire retail community, with everyone pulling out different bits and pieces and just sharing it out there on the World Wide Web, and everybody just taking it and gathering it and compiling it on their own. What I've noticed is that Tesla squeezed to $2,000 a share 90 days after their share dividend. Newegg squeezed to $77 a share 90 days after their merger. Overstock had a crypto dividend distribution date of May 24th, 2020, and 90 days later, around August 20th, 2020, hit its all-time high of $122.32, all because of the T plus 90-day liquidations as the syndicates failed to deliver. And therefore, the stocks skyrocketed to new all-time highs as the shorts were squeezed. But wait, there's more. During stock market crash situations, heavily shorted stocks that are not owned in majority by institutions and market makers tend to squeeze violently. Stocks like Volkswagen that were owned mostly by Volkswagen and Overstock and Newegg and Tesla. Volkswagen's a little bit different because they settled with the government, but they were a single company that owned about 65% of the shares. And there was only 15% short interest on Volkswagen. But exactly 30 days after the stock market collapse of the global financial system in September 28th, 2008, on October 29th, 2008, Volkswagen hit its all-time high. Okay? Plain and fucking simple. Thomas Peterfy of CEO Interactive Brokers said, "I was scared of a domino bankruptcy. I tell you, the rules require the long brokers to go into the market and buy the shares at whatever price. So that drove the shares up to $480. And then suddenly, I guess, it didn't go further, but it could have gone further." The TLDR here, Marcel Kalinovic, CEO of Lit Exchange. We're going to be so fucking rich.
Really goddamn rich.
Unbelievably, ridiculously, lavishly, filthy, fucking generationally wealthy. And I ain't selling till they fire Janet Yellen. I'm holding until Citadel's folding. I'll keep on going until they jail Steve Cohen. I'll not get rid until the SEC finds the FTDs they've hid. I'll not sell till I reach my floor. Until then, the world must know that our governments are bought and paid for. Until that price is ripping, I'll know there's still a lifeline for Kenny, Cordell, Bedpost, Griffin. I'll be staying long until they admit the price is wrong. I won't liquidate until the SEC stops using work time to masturbate. I'll not make a toast until I receive a fucking flying bedpost. And when it's all done and I'm rewarded for having waited, I'll use my tendies to make Chicago sophisticated. We're going to be so fucking rich. Too easy. Too fucking easy.
Billings with an A. Emergency.
Jerome Powell, get the fucking money printer out. Because you're going to fucking need it, man. Get the motherfucking money printer out.
Pay up.
This is a chart that's showing 2008 in yellow and 2022 in white. Tomorrow is the Shemitah, and the Federal Reserve is experiencing unexpected challenges. Apes, short interest, days to cover is 6.5 fucking days. This thing's only been out a month, not even a month. Yeah, barely a month. And it's already got 9.65% short interest with 6.5 days to cover. Failures to deliver on the first date were 43,438,257 with a value of $304,936,564 with 14 cents. And then little by little, using ISDA contracts and continuous net settlement and swaps, futures, rehypothecations, etc., they managed to beat them down to the 5 million range or so. And we're looking at data from the past from about 5 days ago. Again, AMC is experiencing 19.97 reported, self-reported short interest, 64.5% off exchange short volume in FINRA in dark pools, with 4.89 days to cover. Holy shit. I'm not throwing away my shot. No fucking sir. Are you? That's your choice. Do whatever makes you happy. Get that money printer out, Jerome Powell. Ken Griffin, I want my fucking money. Oh, goddamn rich. Thank you, everybody. Thank you very much. MC5, LK, thank you. Diaz, Grandpa Barney, Edward Durbin, Ash, Mitch, Ash Nader, all of you guys, thank you so much. I cannot tell you how much I appreciate you guys. Huge shout out. Thanks again, everybody. Bryce Long, Grandpa Barney, Diaz, White Willow, LK, MC5, everybody in the chat. Think Tank appreciates you. I appreciate you. You guys are the absolute fucking best. I am proud to be here with you guys to experience history together. Fucking history. God damn, we're gonna be so fucking rich. Damn it, we're gonna be so fucking rich. Let me see it in the chat. Are you guys fatigued? Let me see it in the fucking chat. Who's tired? Who's tired? Show me in the fucking chat. I want to see. I'm fatigued. Yes, I'm selling. No, I'm not selling. What are you doing? Are you fucking here? Why are you here? Tell me in the chat. Are you fucking fatigued, retail? Because I'm not fucking tired. I just bought 2,000 fucking contracts and tens of thousands of shares. And I can't wait to buy more. Are you fucking fatigued? Let me see it. Come on, tell me. Are you fatigued? Are you sure? I don't know, man. I'm pretty fucking tired. Yeah, fucking right. Do I sound tired to you? God damn it, I'm making another 10,000 deposit on Monday. I'm going to the fucking bank. I'm gonna buy another 10 grand worth of AMC 1 contracts. I'll fucking stream that too. Why the fuck not? And that'll be my last video until the fucking MOAS, because this shit's on its way, in my opinion. I'm not a financial advisor. This is not financial advice. I'll see you on the fucking moon.
the goddamn money printer out.
If you stuck around this long, I would just like to tell you my sincere gratitude and appreciation goes out to every single one of you. Call your friends, call your folks, share this wherever you can. Share it on Reddit, share it on Twitter, share it on TikTok. I don't give a shit. Share it on WhatsApp. Try to explain to people what's coming. At least if you've done your due diligence, because it's important. That's why I'm doing these videos. So I'm not going to tell you what to do other than do your own fucking due diligence and invest in what's best for you and your situation. I wish you peace and wealth, and I would like to personally thank everybody in the think tank, all of our mods, all of our friends, all of our retail investors here on YouTube. I see you guys. El Combat, 24 The Money, MC5, LK, White Willow, Diaz, Grandpa Barney, Edward, Ash, Mitch. You guys are too kind. Thank you so much. Have a great day, everyone. Enjoy your weekend. Live your fucking life. Enjoy it. Enjoy your friends, your family. Enjoy being alone. Because one of these days, you're going to be filthy fucking rich. And you're going to have to get away from a lot of the other bullshit.